Hello and welcome. You have tuned into Buy Now, Sell Now and ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts and you can connect with us live on a WhatsApp number that will be flashing on the top of your screen. And today onto the Buy Now, Sell Now lens, we're going to be discussing about the big boy Reliance, why this counter is at a record high levels, and we'll talk more on that. But for now, let's have a look at what the markets are up to. So Cheryl, though we have come from the day's highest point, but the breadth of the market is really supportive, as well as we are still holding on to some gains.
Absolutely. Very good morning to you, Shrishti. And if you look at the way how the markets are panning out right now, we are actually trading flat with a positive bias when it comes to the benchmark indices, moved away from the day's highest point, and Nifty Bank also moving in tandem with the benchmark indices. A mild bit of outperformance coming in from Nifty Bank, but nevertheless that one also has moved away from the day's high. Talking about some of the list of gainers, you have Hero Moto, Bajaj Auto that are actually firing up in trade today when it comes to the Nifty. You also have IndusInd Bank, Coal India, BPCL are the gainers. While on the flip side, if you look at the losing end of the market, you have Dr. Reddy's, Infosys, that is ahead of his number, that's fallen about 1.2%. SBI, Nestle as well as Grasim, they are the ones that are declining in trade. If you look at the advanced decline ratio for now, it's pretty healthy. It is very much in favor of the gainers, and this is just initial hours of the trading session. Talking about the sectoral indices and what's the picture there, all the sectors are in the positive territory as of now, with auto index actually taking the lead, 1% uptick coming for auto index. PSU index also seeing good gains, and broader markets are outperforming the benchmark indices. That's the way how the markets are looking like at this point in time, Shrishti. But yes, one cannot not talk about Reliance Industries, given the fact that yesterday that's the stock that led the markets higher, and also it hit a fresh record high levels. And we have Somit who's joining us in the studios today to talk about Reliance Industries. And Somit, what exactly happened to Reliance Industries yesterday? Because we've been waiting for this one to rally and rally hard
for a very long time. Yesterday's move of around 2.7% was the highest move that we have seen for Reliance since July 2023, and after a gap of nearly 6 months, again we have seen Reliance at a life high. Obviously, we have to adjust the Jio's pricing here, and then you get the new high price, and yesterday we crossed that. Now, if you see one technical part, for Reliance Industries, the stock is around 8% away from its 50 DMA, 10% away from its 100 DMA, and 12% away from its 100 DMA. Now, this is important because this means that the downside for Reliance Industries at this point of time, if any fresh investor also invest, could be limited, given that the stock is not too high away or too away from its daily moving averages, which means the downside is now limited. One more thing to notice here is in 2023, Reliance Industries underperformed the benchmark, that is Nifty 50. Nifty was up around 20 odd percent, while Reliance was up only 10 to 11 odd percent. And since 2015 till now, never has Reliance Industries underperformed the benchmark for 2 consecutive years, which means that can it outperform in 2024? Let's find out what are the triggers here for each of the business segments for Reliance Industries. Now, firstly, if you see the retail business, expansion is the biggest trigger here. Now, as its expansion plans unfolds, the recent expansions that the company has done will start contributing on the EBITDA front. Along with this, the company has been doing fundraise via stake sale, which has kept its debt for the retail business also under check. So now the retail business debt has gone up too much. Along with this, the company's digital presence is also rising when it comes to the retail segment. Now, when it comes to the telecom segment, tariff hike is the biggest key trigger here. Along with that, there is broadband expansion and also a steady rise that we have been seeing when it comes to the customer base for Reliance Industries. When it comes to the O2C segment, that is the oil to chemical segment. Now, the business of this segment has been pretty much range bound. 2023 is expected to be a strong year for the refining business. This business has been a cash cow for Reliance Industries and is expected to remain a cash cow for at least the next 7 years. When it comes to the gas exploration business of Reliance Industries, the gas production from this segment has been rising. Gas prices are pretty much stable, and India's gas demand is also on an increasing trend, which means that this business can also turn into a cash cow for Reliance Industries. And when it comes to the new energy business, commissioning of some of its businesses are expected to start in the mid of 2024, and this segment could significantly contribute to the company's earnings from 2025 calendar year as per brokerages. Now, apart from this segmental triggers that we have seen, what are the key other triggers for any investor? Now, if one wants to play the India growth story, then Reliance Industries could be one of the best bets, given the fact that it has exposure to retail, telecom, oil and gas, and now new energy as well. Now, there's always an option left with Reliance Industries to demerge and list its retail and the telecom business. Along with this, analysts are also expecting some value discovery to happen when it comes to the new energy business segment, and CLSA specifically is expecting the company to start its deleveraging mode again from mid of 2024. And lastly, the valuations of Reliance Industries. Now, despite expensive relative valuations that we are seeing for the markets, Reliance Industries valuations are still on the cheaper side. In fact, if you see the company's 12-month forward EV to EBITDA, it's at around 11.6 times, while its 5-year average EV to EBITDA stands at close to 12.3 times. So there are multiple triggers there for Reliance Industries, and yesterday's move could be just one of the display of the fact that the stock has not actually run up, and this could be one of the starting point.
All right, Soumit, thank you so much for joining us and highlighting that why Reliance Industries has been moving ahead, as well as Soumit rightly mentioned that if somebody has to play the India growth story, that a Reliance Industry could be a good play. We will get our experts' take on that as well. But like just yesterday, when we have seen great move coming in on Reliance Industries, yesterday itself, top boss of Reliance Industries, Mr. Mukesh Ambani, in the Vibrant Gujarat Summit, shared the investment plans and the growth triggers for the company. So let's go across and listen out to him.
Specifically, Reliance will contribute to making Gujarat a global leader in green growth. We will help Gujarat target to meet half of its energy need through renewable energy by the year 2030. For this, we have started building the Dhirubhai Ambani Green Energy Giga Complex, over 5,000 acres in Jamnagar. Today, Gujarat is fully 5G enabled, something that most of the world does not yet have. This will make Gujarat a global leader in digital data platforms and AI adoption. 5G enabled AI revolution will make Gujarat's economy more productive, more efficient, and more globally competitive.
All right, so that's the word coming in from Reliance Industries top boss Mukesh Ambani. But what should you do with Reliance Industries, given the fact that now it's hit fresh record high levels? Is this the right time to invest in the stock? Because given the fact that, like Soumit also mentioned, a lot of brokerage houses also of the view that if you want to bet on India's story, Reliance is a must in the portfolio. So let's ask a question to our experts, Kunal Bothra as well as Vivek Karwa. Very good morning to you, Vivek, as well as Kunal. Thank you so much for joining us on ET Now. And Vivek, if you go back about 20 years or so, when you had Reliance Industries or Reliance Mobile ad, their tagline definitely was "Kar lo Duniya Muthi mein." If you look at the way how Reliance Industries has been actually performing in sectors that it has diversified into, and the presence of Reliance Industries, you would actually tend to believe that that's exactly where they're headed to go ahead and achieve the motto, the tagline that they had. Talking about Reliance Industries in particular, given the fact that the way how the businesses have spanned out, now the stock is at record high levels, and everyone's of the view, if you're betting on India's story, you have to be betting on Reliance Industries as well. Do you concur with that view?
Good morning, everyone. See, on a lighter note first, Karlo Duniya Muthi Mein is almost bankrupt today. It went to Anil Ambani. But anyway, jokes apart, see, if you are really going to bet on India, you have no other option but to bet on Reliance as well. And 2-3 points over here. First point is that at this market levels, when everybody is a bit confused that market should correct or not correct, you are getting a stock at 11-12 PE, which is phenomenally, say, a value buy. So if you're buying it here, you might see 200-300 rupees plus or minus, not more than that. So you will not have any kind of, say, attacks in the market, and you can still get money. Now, if you add up Reliance Jio, which is around 240 today, the stock is at almost 2,905. And still undervalued. The way Mukesh Ambani spoke yesterday, say companies are generally committing, say, few lakh crores over next few years, but he said he is going to invest 1 lakh crores in 1 year, which is phenomenal, and that too without raising much debt. So going forward, I think the value unlocking on the retail front is going to be a big trigger. Value unlocking on the hydrogen investments, what they are doing, that is going to be a big trigger, and also the green energy. So we again heard Mukesh Ambani speak on that. So if somebody really wants to be safe, I think you can put bulk of your money in Reliance today and just wait on. You will make decent money going forward. So I am very bullish on Reliance.
Okay, so that's the fundamental take coming in on Reliance Industries. Very positive on the stock as of now. But Kunal, a fresh life high for Reliance Industries. Did spot that it was a breakout candidate. What are the next targets that you are setting for this one?
So yeah, I think it's now a possibility that the stock can replicate what it did a long time back. I think in 2017 the stock came out of a major multi-year of consolidation, literally like a 200-point band of consolidation for Reliance Industries with an adjusted price of 550 approximately. And from there, what started off was a huge uptrend which lasted for I think 3 or 4 years on a trot for the stock. Now, in the last 2 years, the stock has again gone through a very similar kind of a price time consolidation where 2600, 2630 odd mark has been a major resistance for the stock. What I like about the charts is not just a breakout, because a breakout can probably come and go if the markets get into a bit of a choppy phase. But the way in which the stock had moved up higher, the build up of long positions which was seen yesterday, and the swiftness from traders to try and lap onto positions, I think all of that indicates that there should be more meat ahead in terms of the trends for Reliance Industries over the near to medium term. So even if you look at a modest targets of this 400, 450 point consolidation which the stock was stuck into over the last 2 years, we could be looking at 3000 approximately as a potential target for Reliance over the next maybe 6 months to 9 months approximately.
All right, so that's the view coming in from both of our experts when it comes to Reliance Industry. Definitely bullish views coming in from both of them. But viewers, the countdown has begun. Mark your calendars for the 11th edition of IDFC First Bank presents ET Now Leaders of Tomorrow Award. As India's longest running TV show, ET Now Leaders of Tomorrow has championed the development of the startup, SME and entrepreneur ecosystem in India for over a decade now. So in its 11th edition or 11th season, we are focusing on innovation as a key catalyst for growth and disruption with the theme Innovate to Elevate. Leaders of Tomorrow Awards will acknowledge remarkable strides made possible through the power of change. So catch the 11th edition of IDFC First Bank presents ET Now Leaders of Tomorrow Award live on 12th of January, that is this Friday from 5 p.m. onwards.
Witness the unfolding of tomorrow today. Recognizing innovators who set the benchmarks, entrepreneurs who define best in class, trendsetters who redefine the norms. Be a part of this momentous occasion for SMEs and MSMEs. IDFC First Bank presents ET Now Leaders of Tomorrow Awards Season 11, only on ET Now.
Presented by IDFC First Bank, always you first. Associate partner Adani. Education partner Bennett University.
Alright viewers, with this it's time to slip into a very short break. Don't go anywhere, we'll be right back, and then it's the time to take all your stock related queries, so stay tuned and start writing to us.
Welcome back. You're watching Buy Now Sell Now on ET Now show, where we get you answers for all of your stock related queries. Remember viewers, you can connect to us live on the WhatsApp number that's flashing on your screen. And with that, let's actually get connected with our experts and also take your queries to them. We have Kunal Bothra as well as Vivek Karwa joining us on the show. Once again, good morning to both of you. And let me take the first query, and this one is coming in from Sudarshana from Bangalore. And Sudarshana wants to know, is it good time to buy RBL Bank, DCB Bank and CSB Bank in the banking space? Kunal, what's your take on this? All of them are private sector banks.
Yeah, so I think all three of them are very good charts when we look at it comparatively. RBL Bank is coming back into a breakout mode around this 280 plus mark. DCB Bank also, I think in the last 2-3 weeks has shown some excellent price volume action. So that stock also gains good momentum, looks like it could gain good momentum going forward. And so is the case with CSB Bank. That stock has also come back towards its 15-day moving average. My only catch is that I'm actually expecting the indices to get into a bit of a consolidation. So, and specifically on the banking index. So possibly you may probably get these stocks maybe 4 or 5% cheaper from current levels in case if this correction extends for the banking index. So if you want to time it perfectly, you can probably wait out for that correction. Else, you can maybe buy partial quantity at current levels and look to add on dips if it comes for these banking names.
All right, Kunal, the next query is also for you. Debashish wants to have your take on some of the IT majors. He has HCL Tech, TCS, Wipro and Infosys in his portfolio and sitting in profits from the range of 10 to 36%. But he's just highlighting that after the results, there is some volatility that generally kicks in. So what's the short to medium term view on all these IT counters? Should he go ahead and book some profits?
The good part when I look at the results data and the derivatives data specifically is that the IVs have not risen as per the expectations for most of the traders on these large cap IT names. And I think that's why you're seeing the IT stocks, specifically the likes of Infosys, TCS, etc., going into a bit of a shallow kind of a correction. Maybe I think post results we may not expect the stock to get into a more than a 5% plus minus gap up opening for themselves. So I think what we could be looking out for would be a phase where these stocks, in case if they deliver some negativity in terms of results, these stocks may correct by a margin of 4 to 5% broadly. But then I would believe that the tendency for the stocks to settle could be pretty much high. But if these stocks break out on the upside above 5%, then we could be looking at a much more bigger breakout for these large cap IT names. My suggestion would be to hold on to these large cap IT stocks since you already have a buffer in terms of profits.
All right. This next one is coming in from our viewer, Vivek's namesake, that is Vivek. He wants to know whether it makes sense to invest for over 2-year time frame in JSW Infra. What's your take on this one, Vivek? Does it make sense to invest in JSW Infra right now for good gains in the next 2 years or so?
JSW Infra overall looks interesting for next 2 years. Particularly, again, we have interim budget or vote on account after few days, approximately 20 days more. What I'm seeing is that government is bound to spend more and more on infrastructure. And JSW Infra comes from a good house, wherein generally what happens is I am a bit cautious on infra stocks because of management concerns. But when it comes to JSW, it's a good management from a good house. So I would suggest hold on. Definitely you should invest in. But what you should do is till election, you should do it in a SIP manner in this stock and then hold it for next 2 years.
All right, moving on to the next one. And Vivek, once again coming to you, this query is from Hanif and he has purchased Ujjivan Small Finance Bank, 4,000 shares from a price of 58 rupees. Good to hold on? And if yes, then how much more upside should he expect?
See, the small finance bank segment has run up a lot, frankly. Though Ujjivan looks good, it might go till 64, 65, that is my feeling. But what I feel is the safety net is more in large cap banks right now compared to small finance banks. And particularly when you look at Ujjivan also, it's almost like 11,600 crores market cap. There are say listed banks which are almost of same market capitalization. If you look at DCB and all, it might be even less. So why go for a small finance bank? Go for a full-fledged bank like DCB. In fact, Kunal also had recommended it some time back. So those banks looks more interesting, more safer than small finance banks.
All right. On that note, we'll actually slip into a break on this edition of Buy Now Sell Now. When we come back, we'll continue taking your query, viewers, so don't go anywhere.
Welcome back to Buy Now Sell Now, where we get you answers for all your stock related queries. Today on to the show we have Vivek and Kunal with us to guide you better. And the next query that I have is coming from Rita. And Vivek, this one is for you. Rita says that she has got an allotment of Happy Forgings. So what's the advice at these levels? Should she continue to hold this for a long term?
A very good managed company if you're going to hold it for a long term. I think you should hold it on. And if you look at the forging industry, the automobile industry is overall doing well. The forging is doing well. And the signs are very clear that China also might recover from here. So Chinese markets are almost at lower end. So what I feel is once all these factors play in, forging will be one space which will do good, and happy forging looks. I think you will be happy holding happy forgings.
All right, you'll be happy holding happy forgings is what Vivek has to say. Let's talk about a stock which I don't know if viewers are happy or no, given the way how the stock is performing, and that is Polycab. Uh, Look at the stock right now. Over the last two trading sessions, or last 1 month, has fallen about 30%. Last two or three trading sessions have not been great for this particular counter. And we all know that there is a huge news report that has actually impacted the stock performance. Now, actually, I'm not lying. Actually, we have over 12 queries already only on Polycab right now, Vivek and Kunal. And most of them are only asking one question. Is it the right time to buy Polycab, given the fact that this one has been a leader in the industry that it is it's present in? So everyone wants to know, should they go ahead and buy right now given the fact that there's a sharp correction in Polycab stock price? Also, there are some of them who are now running a loss after having healthy profits in this particular counter. What should they do? So first, Vivek, your take. Fundamentally, do you think this particular news development hampers the prospect of Polycab going ahead? And what should your investors do? If you're investors, stay put with this one. And if you're looking to invest, is this the right time?
In markets, we say that a bad company in good hands can really do well, and a good company in bad management hands can really suffer. And that is what is happening now. So what happens is the goodwill of the promoters takes a dent over here, and particularly when you are into the listed space. If it is a private limited company, if it's all the money is my money, then I can do anything with it. I throw it in Bay of Bengal or NBC, nobody has to actually bother. But when it comes to public limited company, you are playing with shareholders' money, and such news really dampens the future prospects, say the ability to raise funds whenever required. So at this moment, say what is going to be the impact? What penalty will more such details come out? We have no idea. So it is always safe to be out right now. If nothing happens, stock might recover, but still, it is better to be out of such space right now.
Between Polycab and Havells, which one do you think would be a better one to buy right now? Havells, is it? Or something else altogether?
Definitely Havells, and I think as an MNC, again, I hope that the management and the books are very clear over there, and the confidence is of course more on the Havells side. So definitely you can buy Havells, and that's the reason the stock is doing good even in this market. And compare it with other cable companies, which are mid or small cap, they are suffering with Polycab. So I don't know what is there, but people have some instincts from inside which come out.
Kunal, what's your take then? What should they do? Should they actually listen to the instinct and go ahead and act on it and look to buy Polycab right now, or do you concur with what Vivek had to say?
See, I always believe market runs with fact rather than fiction. So I think the fact is that the stock has been under the scanner of huge corporate governance over here, and I believe that it doesn't make sense to try and buy this with an expectation that there could be some sort of a revival. If it happens, maybe the stock will run up by 5%, 10% higher from current levels if there's any kind of a clarification or dismissal of any kind of this negative news flow for the stock price. Maybe that could be a good point to try and buy the stock, but then at such kind of events, the news flow surrounding the stock and such kind of a sharp price action, technically I would not advise a buy on Polycab.
All right, so that's the fundamental as well as technical take coming in on Polycab. But moving on then, and Kunal, coming to you for this one. This query is from Satya, and he's holding shares of SJS from a price of 480 rupees. He's highlighting that the stock went up but is now back to 588 odd levels. Should he continue to hold on this one or move out? He has a time frame of 1 to 2 years.
See, as of now, you can hold on, but my only concern, there are 2 points of concern over here for the stock. One is that the stock is now below its 200-day moving average. I think that's a point of concern, because at current market scenario, if a stock has fallen below its 200-day moving average, we may probably expect that some sort of weakness could be emerging into the stock price. But I would still believe that a support of 550 on weekly closing could be something to watch out for which means another buffer of 5%, 6% from current levels. So I would suggest that hold on to the stock as of now, keep 550 on weekly closing as a stop loss for this trade. In case if the stock drops below those levels, the weekly charts and the monthly charts could start to deteriorate. So I would believe that that could be a trigger point for you to exit, but till the time it holds above 550 levels, continue to hold on.
All right, Kunal, I'm not sure if you track this particular counter, Global Surfaces, because Vikram has invested in this particular counter, 500 stocks at the price of 235 rupees per share. He wants to know whether it's a good stock to stay put with.
Apologies, I don't track the stock.
Vivek, have you actually tracked this one by any chance?
So basically, they are into granites and that space, but the stock looks costly at these levels because if you compare it with the peer group, it's almost at double the valuations. So I would not advise fresh buy in this. That's the thing.
But what if you are already invested in it? Because the buy price is around 235 rupees per share.
You keep booking profits since the valuations are high, and stock also is a micro cap, is just under 1,000 crores market cap. And at these levels of market, when we are trading at 24 PE, even if there is a 2 or 3 PE correction in the markets, such stocks can show you minus 30%. So you got to be double cashes right now.
Right. Moving on to the next query, and Kunal, this one is from Vinod from Gurgaon. He's a long-term investor and holding 100 shares of UPL from a price of 623 rupees. He's at a loss in this one, and he also has 200 shares of Jubilant Food from a price of 470 rupees. What's your advice? Should he continue to hold on, or can he go ahead and add more at current levels?
See, I think over the last so many months, I've been advising that not to look at the UPL as a buy candidate because the stock has been reeling below the 200-day moving average since quite some time. I think if I'm not wrong, it was in the month of May or June that the stock almost at 740-50 levels had broken below those levels, broken below those 200-day moving averages. And from there, the stock has just gone through a corrective phase. I think at one point, the stock was almost on the verge of breaking below the 500 mark. Even currently, the stock is still trading below the 200-day moving average. So it doesn't make sense purely on the technical basis to try and buy the stock or hold on to the stock, even if you're a medium to long-term investor. Now, in terms of the other, stock Jubilant Food, the short-term charts have started to show signs of mild recovery. But the only concern with the stock is lack of momentum for Jubilant Food. It's unable to convert those smaller rallies into big trends, especially in this kind of a market where traders are trying to latch on to big trends in the making for stock prices. So that's the only concern with Jubilant Food. Short-term wise, I would look at 550, 555 as the target for Jubilant Food.
All right, so that's the take coming in on Jubilant Food. But on that note, we slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking your query, viewers, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking your stock-related queries. Then this one is coming from Balan and Kunal. He has Z Enterprises at a price of around 235 rupees per share, as well as Sheela Foams at a price of 1,150 rupees per share. He's asking whether he should shift out of both of these counters or stay put with them. And if you suggest that he should shift out of them, should he look at ICICI Bank and Ambuja Cement instead?
See, the options are also very attractive. So ICICI Bank, Ambuja Cement, they are attractive options relatively. But then the charts for Sheela Foam and Z are also indicative that maybe at least for Sheela Foam specifically, that the worst could probably be behind into the stock price. Currently, the stock has come back above the 200-day moving average. It's forming a bullish flag formations. The volumes have started to increase up higher gradually for the stock in last, 8 to 9 months. For the stock, this could probably be an indication that maybe the worst could be behind and the stock could start up into a strong uptrend. Even for the likes of Z, I think after that 2 days back of news flow for the stock price, sharp cap down, the stock somehow seems to be coming back into a zone where it's still finding support at the 230, 240 mark. So I would sense that maybe delay this decision by another couple of months if possible, because if both these stocks get into a breakout, you may probably be at a point where these stocks may rally up significantly higher by a margin of say 10-20% odd or so.
All right, then that's the take coming in on Sheela Foam. But with this, viewers, let's start taking all your queries in the rapid fire session. And the first query is for you, Kunal. What's the short-term view on KEI Industries? Usha is holding these shares very near to the current market price. Should she move out of this one and make a switch to Voltas?
Yeah, I think that could be a very good decision.
Vivek, we have Venkat Ramanan, who has Birla Soft at a price of around 286 and also Intellect Design at a price of around 445 rupees per share. Makes sense to stay put with both of them or look to exit?
Yeah, hold both.
Okay, Kunal, Reshma is at a 17% profit in IRCTC. Should she continue to hold on in this one?
If you are a medium-term investor and has that discapitite, I think you should continue to hold on.
Tanya is asking Kunal, KNR Construction from a 6-month perspective, good buy?
I think it's a very good value buy at current levels.
Vivek, can Pawan go ahead and invest in Adani Power with a 1-year investment horizon or any other share from the Adani group of shares?
Adani Ports still look good and Adani Wilmar is undervalued.
Okay, Vijay wants to know Exide Industries for a fresh entry for a 2-year time frame. Does it make sense? Vivek, also should he look at doing a monthly SIP in this one?
Not at these levels, it's quite costly. On dips, yes.
Okay, Kunal, can Nitin go ahead and buy SRF or Vinity Organics at current market price for medium term?
I would not suggest so.
Alright, this one is Anupama from Abu Dhabi and she wants to know about City Union Bank, 300 shares at a price of 165 rupees per share. She's suffering a loss in this one. Kunal, exit or hold?
As of now, you can continue to hold.
Okay, Vivek, between Balmain Lorry and PCBL, any of the stock that you like at this point for a fresh investment for a long term? This question is from Kalyan Bose.
Balmain Lorry is better investment.
Alright, this next one is coming in from viewer Swati wants to know about KEC International Balrampur Chini suffering a loss. Kunal, what should she do with this one?
KEC International, I think you can continue to hold. Balrampur Chini, maybe if it comes closer to 440, look to exit.
Okay, Vivek, Mohit is holding 500 shares of NMDC from a price of 136 rupees and he also has NMDC Steel against demerger. His time horizon is for the next 2 years. What to do?
Next 2 years will be a good hold.
Alright, and with that we come to the end of the rapid fire as well as the queries. Thank you so much Kunal as well as Vivek for joining us on the show to talk about Reliance Industries in particular as well as resolving all the viewer queries. And viewers, with that, we are out of time on this edition of Buy Now, Sell Now. So it's a goodbye from Shrishti, myself and the team that put the show together. So stay tuned. Markets at noon coming up next.